I think it's really interesting to note that last week we had two things. So retail got decimated over Macy's earnings that were really bad, and it kind of put a shadow and a cloud over the whole sector. All that, it's amazing how how a sector can be jeopardized, or it can be, euthanized almost by one stock. Really, I mean, that day was a really bad day for Macy's and the market and the sector. And then suddenly we saw it completely be rebound with Target's numbers today. We saw the whole narrative last Wednesday about the recession with a yield curve that was inverted for 2 hours or a day or 2 days, and now we're seeing the market rebound. So what is really going on? How are we going to be able to justify a further? We've got Powell speaking on Friday. We've got that whole thing going on between Powell and the president's involvement in the Fed and whatnot. How do you justify lowering interest rates in a market that's rebounded so beautifully, right? So we broke down really deep over the last week. We've seen the market come back up, not only with the retail numbers, but just in general. So are we at resistance here on the Dow at 26.3 and the S&P at 29.25 and whatnot? Or is this a rebound with more room to grow? Or are we waiting for the little bit of a more fuel from lowering interest rates, which may be a 25 or 50 basis points, president calling for a 100 basis point move? Another thing above my pay grade, which I'm trying to understand, is the relationship between the Fed's funds rate and the yield, right? Are they supposed to reach break-even point, as you said, Madam Voss? So there's a lot on the table.